what kind of technical strength index or sorry, strength index we have? We have technical, where we have from 5 minutes bullish to monthly tick, right? So, and these are all calculated every time we get a tick from the exchange, right? And the tick that we get is every 5 minutes. Every 5 minutes we calculate for the entire universe of the stock using all those parameters, right? So there are trillions of transactions which happens. When I say transaction, it's trillions of code execution happens within that few seconds, and we produce this near real time, right? So feel free to use the ones which are there for 5 minutes, or whether it is 10 minutes or daily tick. Okay. Same thing is bearish. If you want to exit the stock, or if you are daredevil, you want to go for future shorting, then this could be a good one. Fundamental, we have profitability. So the 4 important things for the fundamental, right, is one is what people look for is profitability, another one is growth, value, and stability, right? Depending on your basically trading or investment profile, right? So choose the one which is most important, and then use the rest of them as complementary. Right? A typical usage is basically when you're looking at fundamental, right? Also look at something, because fundamentals doesn't change too often. Every 3 months it changes, right? Or 1 year, depending on the kind of index. Like stability will not change every quarter. It will perhaps change once a year, right? So what is the right time? That's where the technical comes in. The combo of technical and fundamental comes in. You look at the fundamentals and then see that what is the right point of entry when it comes to technical, right? So that's where you can mix and match things, right? Or if you're looking at technical, right, and technical is good but valuation is way too high, right, then it's likely that it could get hammered. I mean, on a bad times. Could be an interest hike, or could be China flying planes over Taiwan, or there are a lot of such global macro events which has happened in recent times, right? So that's where the stocks. So basically, mixing of technical and fundamental. This is how you can do it. I'm not saying that you should always do it. Use your discretion and use your more than that. Use your comfort level and command over that particular topic. Right. That's the best results you'll get. Relative strength. Briefly, we covered in some of the previous sections. So you can do by broad-based index, or you can do by sectoral index. Right. Strength of a stock vis-a-vis a index. Profitability index, right? So the key input for profitability index is key profitability ratios, key growth fields, right? Key financial fields, part of the financial statements, TSR specific algorithm, and what we bring out here is a result between 0 to 100. You can use this as a parameter along with other filtering. Right? So very, very intense calculation for this, right? I mean, we just not look at the last year value, right? We see that where the pattern is. For example, if it has profitability, right, we'll see the net profit not only for this year, but how is it moving historically, right? That means if it is consistently giving a profit which is higher than the previous in terms of percentage growth, right, naturally the weightage would be much higher. Without delving too much information about that thing, right, because it's very, very complex, not possible to have the entire explanation even for a full day session. I just want to give you a brief idea about what we would be doing. So ultimately what comes out to is a value between 0 to 100. That's where we hide all the complexity and give you a very simple number for you to use it, right? Stock specific profitability index, equity page, you'll get it, customized equity page, screeners, big screen, right? Okay. Over here, right? So equity page, we have seen it. Let's see where to get high to low profitability in the pre-screen. Go over here, TSR strength index. Go to financials. In the financial, we have profitability. Go from high to low, right? You remember in the post field, we had that my tech, right? So that is still retained here, and you'll see those 2 values that we added. So coming back to profitability index, right? So these are the stocks with very good profitability. So the best in terms of this thing, InfoEdge, followed by NMDC, right? Along with this thing, you also get a quick peek of others like growth, stability, value, right? So looks like that InfoEdge is looking good from a lot of perspective: technical, stability, growth, and this thing, right? Purely from what we see out here. The other example that we have is custom screener. Find the stocks which are more profitable than 80% of the stocks. Okay. So again, go back here, go DIY, right? DIY custom screener, strength, and then we have profit rank, more bullish than 80% of the stocks. So this is how you'll find it. Look at here. So again, info edge comes out here, NMDC, same set of information. Obviously, that the algo is same, right? So we'll get the same set of information. Okay. Use of profitability index. Analyst looking for profitable business. Mild risky. So when it comes to profitability, right? Trust me, it is generally on an expensive side, right? So the risk is higher. Right. So if something is performing very well for last many years, right, it is likely to perform very well in coming years. That is the general expectations. No guarantee, but the expectation is there. One of the stock that I used to track long back, right, was Apple. And it was always going up, and I think it almost went into a 2 trillion, more than 1 trillion US dollar valuation, right? It was continuously going up, so it was profitable. But at the same time, when you look at valuation, it was always very expensive. So profitability generally, are highly profitable companies generally are more expensive when it comes to fundamental, right? They generally give good returns. How do you use it? How do you use profitability? A general guide, not necessarily you have to use it, but as a guide, aggressive analyst should look for growth, profitability, and growth. That should be the first thing they should be looking for. Defensive analyst, what they should be looking is profitability is good, but at the same time, stability is important, right? So you should also look at the stability part. So that even in a downturn, the company is stable and it will recover at some point of time, right? So you guys remember any stock that was pretty bad in any of the recession, whether it was Asian financial crisis 97 or dot-com burst in 2002, 1-2, or this thing, financial crisis in 2007-8, any stock which was stable survived. A lot of stocks, I mean, they couldn't even come back to the original level, right? I mean, forget about IPO level. They were always going down, 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 and a lot of those companies don't even exist today. Okay. Okay, the green zone, and the profitability index is 55 to 100. The higher, the better, right? Gray zone, 45 to 55. You can't really make any judgment on this particular side, right? Whether you need to hold it, buy it, sell it. No, right? If you already have it, perhaps holding could be one of the options, because still the signals are not very bad, right? You need to wait till you clear get signal, and these are all indecisive stocks. Red zone, avoid, inch below 45, right? And they are less profitable stocks. Right? So very much in lines of profitability will have valuation, right? Of course, the parameters used for valuations are much different. Key inputs, valuation ratios, financial fields, TSR specific requirement, and it goes with this pretty same number, 0 to 100, right? Where 100 being very good in terms of value, and 0 being expensive, very, very expensive. Okay. Same place where you get profitability, valuation also goes in the same place, exactly same stuff, right? I won't repeat a lot to make you guys bored. It's already Saturday, right? Number one, and that too after lunch, so it's like pretty, it can go a little drowsy, right? So same process to follow that, right? Unless any of you want me to explain any particular index with example, I'll go really fast into the next 2-3 ones. Value strength, what you should be looking, undervalued stocks, right? Long-term investment, wealth generation, dividend income, right? What you should be looking, if you are looking at all these things, long-term investment, wealth generation, or dividend income, then you should be looking at value index. Combining aggressive analyst, valuation plus technical, right? Now, basically, if it is at a rightly valued and it is bullish signal, that means it is best of both worlds, right? It is best of both worlds. that you're finding at a bargain price, and technical is also good. So it's likely to give you good results. Right? Tata Steel is one of the examples. Let's look at Tata Steel. Right. So from Tata Steel perspective, purely from value, it is very good, and technical strength is also good. Right. Technical strength is also good. So this is one of the good bet which our team has found. Looking at the chart, Tata Steel, right? So I mean, it's in a decent this thing, right? So after falling for a very long time, it has made a small nice base, and then it's going up. Right? So likely to cross this if rest of the situation is conducive. Defensive analyst, again, defensive means you have to look at the stability as well, right? So a lot of times stocks gets beaten very badly. It could be because of higher debts and other things, right? So the stability also is important. If the stock is beaten down badly, right, naturally the valuation gets better. But you also need to see through that what is the reason why it's happening, right? So it could be because of bad debts or some bad news in the industry, management change, or all those kind of things. Okay? So stability is also important. You need to see that whether the company can survive or not. Coal India is looking good, both from stability and valuation perspective. Let's have a quick look at Coal India. It's looking good from both these perspectives. Value is pretty good, and stability is good, right? And again, I mean, from stability perspective, government companies are generally considered to be more stable than a lot of other companies, right? Government is there to back them out if needed. Same thing, green zone, red zone, and red zone. Before we proceed, any questions, comments? Which stock should we select where price is higher than the value, or vice versa? See, valuation again, right? Valuation is calculated based on multiple different parameters, right? So when you find that the stock is at a rightly valued, right, is a good time to enter, provided rest of the situations are conducive. For example, see, again, it depends on your trading style also, right? If the stock is at a high value, right, then obviously you can enter the stock if rest of the things are good. If the valuation is poor, then what you need to look at is should you hold or not. That depends on the growth. If the growth is good, profitability is good, right, even the valuation is poor, you can still continue with that, right? So it's a whole 360 degree view that you need to look at. But just looking at the valuation, I think if it is low value, then you should avoid it. If it is high value, then you should get in there, right? As a general concept. All right, next, right? If the value is below 45, avoid. Same thing is growth, right? We use a lot of things. So if you see, there's an additional thing which has come in, right, which has much more higher importance when it comes to growth, which is CAGR. Right? In the previous ones, we do use CAGR. CAGR is an important thing, but here it is much more important, or very, very important part of growth, CAGR. Right? So key financial fields, and then we have our own algo. Same thing, results, stock specific, same places where you find growth, profitability, you'll find this also. You can filter. Analyst looking for future returns, characteristic, high risk, high reward, right? So growth stocks, you'll find it expensive. Since it is expensive, the risk is high. But since it's going well, the reward is also very good. Capital appreciation is likely. You can beat the market returns, right? Since the growth is good, there's a lot of traction over there. You'll find a lot of recommendations, particularly from big banks like JP Morgan's of the world. Right? They'll come and continuously give increase the target, right? Combine use, aggressive analyst, growth, profitability, and technical. So even though it is expensive, right, you may want to get there because that's how the newer highs are made. Right? That's how all-time highs are made. So if you're looking at growth, profitability and technical, then get there. If you are an aggressive person, right? If you are defensive, then always come back to stability, right? So that is the one of the key things for stability, right? Along with many parameters. That is one of the most important ones. Right? If there's a low debt, then you're good, right? But at the same time, your revenue should also be growing, right? Like if there's no debt and the revenue is falling, it's a serious thing, right? So that's where the growth and stability both comes into picture. Same thing, green, red, and gray zone for profitability. Stability, key drivers, key efficiency ratios, and stability ratios, right? We have various coverage ratios, various efficiency stability ratios, right? Lots of them are related to debts that play a key role here. CAGR, right? To tell you that if company is growing, the stability is there, right? If the company is not growing, then the proper stability will also come down. The financial fields are algorithms, right? So where do you find these things? Very similar to profitability, growth, and value. Equity page, all these pages which we have discussed. Use analyst looking for dividend income. So more for risk averse. Let's say you just got retired. You want to get, and you feel that you can get better returns in stocks, right, over FDs. Then these are the kind of stocks that you should be looking at. Primary dividend, low risk, company may not collapse even in a serious downturn. Steady return, safe investment. How do you use it? Aggressive analyst, stability and growth are a very good combination. It's stable and growing. Defensive, stability and value. Okay. Same thing, green, gray, and red zone. Pretty much similar. Okay. Any questions so far? We have covered the financial world, right? Fundamental world. Let's get into technical world. Okay, Mr. Neelkant, the intrinsic value, right? Again, the intrinsic value, there are multiple different ways to calculate intrinsic value, right? What method A calculates and what method B calculates is very different. For example, let me show you one of them. By two industry standard, right? Peter Lynch and Graham. We'll see that where the values fits in. Do you want to recommend a stock name? Vedanta. Okay, great. If you look at this, right, Graham number says 719. Okay, and then the book value says 223 per share. Okay, and then Peter Lynch says below, right, 1735. So you see the difference. Whereas our fair value is 1593. You'll see there's so much of difference when it comes to the fair value. So it depends on the algorithm that you use. Okay. Here in Top Stock Research, we use 4 or 5 different mechanisms to calculate fair value. Right. So it depends what you trust. Just it may not be a very good idea that intrinsic value is 1600. How do you get that, sir? 1600. In our system, as per our calculation, it is 1593. Right? As per Peter Lynch, it is 1738. And you go to other parameters, you'll find different set of values for different things, right? So which method you trust more? Right? These are very, very powerful tools, but they need to be used when you have a much better understanding. You can use this as a reference or as a basis for going ahead. Okay? Yeah, that's what. Right. See, basically, you need to understand there are certain risks when it comes to an automated calculation. Right. There's certain risk which when it comes to automated calculation. Number one, when you say intrinsic value, what it does is basically it calculates values primarily based on the data which is available as of 31st of March. Right. Now, let's look at the chart of this thing. That will give you a better idea. Right? If the stock is beaten down badly, right? If you see, the stock is beaten down from around March 2022, 31st March, right? At the financial year, the stock is beaten down badly, right? It's about less than, is about 50% of what it was there, right? So that is why you'll see that the intrinsic value, right, is higher, because all this data which is calculated, especially the intrinsic value, anybody who has more of the financial statement understanding, right, will know that a lot of these things are used as of 31st of March. So based on 31st of March, this is the value which is appearing. Intrinsic value is calculated post quarterly results. Yes and no. It is calculated daily, right? But some of the major numbers which are available from the company, right? We have to depend on companies. So those numbers are basically shared to us, or basically shared to public on 31st of March, right? Or I mean, as of 31st of March. That is why you have to look at the graph, right? That the price got beaten down. So Vedanta looks from that perspective. This is where Vedanta is. So it is calculated daily, Swapnil. It is calculated daily, right? But a lot of these factors, or basically inputs, right, are as of 31st of March. Okay. Now a company which, so the calculation, right? The calculation we are doing as of 31st of March, it is as of that date, right? If you see, the market was bad around March, but still this stock was going up, right? And perhaps because of some of the good things, then suddenly it got down. So you have to also look, apart from these values, right? You also have to look at some of the other things, like what is the recent development, right? Is it Tuticorin which was a cause of a problem, or what was the cause of problem, right? So yeah, so that is where a little more research before you want to invest in a big way. Right? If you are a technical person, you don't have to look at too many things. If you are more of the fundamental, which means long term, that's where you have to look more at the ecosystem of the organization. Prices changes daily, and financial numbers. Okay, financial numbers are two kind of things. Number one is which is based on a quarterly results or an annual result. For example, revenue is as of 31st, right? So anything which is on revenue is likely to be on as of 31st of March, or basically any of the quarter ending. There are certain numbers which are calculated daily. For example, price by earning per share, right? Or enterprise value, price by book. There are lots and lots of these things which are calculated daily. So in our calculation, we use both the ones which are changing daily as well as the one which is changing quarterly or annually. Right? I hope it answers your question. You'll see these values changing almost on a daily basis. Right? Great.